Welcome back to BLOCKTV. And in the wild west that is the crypto space, we're constantly looking for oracles who can come out to predict the market correctly. While many try, few succeed. Yet despite high volatility, there are those out there who with luck, gut instinct or raw talent manage to hit it right on the money. And we're joined by one such man, Joel Kruger, currency strategist at the LMAX Group. Joel, thanks so much for being back with us.
Good to be here, Asher.
All right, Joel, talking about high volatility, certainly not just limited to the crypto markets today. We are seeing crypto level volatility spread across a number of asset classes. But let's talk about the one that is driving some of the biggest moves at the moment. Of course, I'm talking about that black gold that is oil. Massive moves today, down 31% after it seems that OPEC Plus, that's OPEC and Russia among others, were unable to make a deal on a supply cut, seeing the price absolutely tank. Joel, where to from here, and what does this massive drop, the likes of which we've not seen since 1991, mean for this incredibly important global commodity?
Well, from my experience, when you see drops of this magnitude, they're generally followed by a period of consolidation and correction. A lot of fear and panic, as we've been seeing in markets relating to other themes around the coronavirus, have also kind of played into market drops that can somewhat get overextended if they move too far and fast. Now, I'm not saying that we can't fall further, but I think that we have seen a substantial decline in very thin illiquid trade, and I would suspect that we should start to see some form of a consolidation and potential rebound attempt in the price of oil.
So do you just see this as a panic move? I mean, the market seemed to have priced in that significant cut of 1 million or 1.5 million barrels a day from the OPEC meeting that took place on the 5th and 6th. When that didn't happen, do you think that commodities investors just began to panic, or do you think that this is really part of a significant downward trend over the longer term? With some analysts I've seen out there even predicting that we could see $20 a barrel at some point in 2020. I mean, is that realistically on the cards or just spin?
I think it's very realistic. I wouldn't rule that at all. I think that it's very important to understand, and this is something that we've highlighted on previous conversations, that what we're seeing right now with all of these themes that are going on, it's all a part of one bigger distressing theme. So we talked about coronavirus and the catalyst and not cause for a downturn. And now we're seeing the stress of the oil market. And all of this is kind of symptomatic of what we're seeing with the global economy at a point in the economic cycle after emergency policy accommodation and government stimulus for over a decade to help prop up the global economy. Now that that is exhausted and we're seeing that kind of at the end, there's a lot of distress in markets. And so with the oil market, we're seeing a lot of that pressure come through. Clearly, the coronavirus has impact on the price of oil to distressing levels. There's been calls, OPEC and Russia, to try and do to work together to kind of cut production to help raise the price of oil in response to that fallout. Obviously, Russia reportedly not wanting to cooperate. There's politics around Russia and the U.S. with Russia trying to sweat out shale producers. And so it gets pretty crazy with all that's going on when you have a system that is now exposed to vulnerability given the lack of accommodation stimulus that can be there.
All right, and let's move on to how that's impacting other sides of the global markets. Equities now seeing some pretty staggering drops. There in my home country of Australia, we saw the key market indicators down 7%. Across Asia as well, in Japan, significant moves downwards. And as we head towards the opening, this segment today being filmed prior to the opening of US markets, but as we head towards the opening, Dow futures are pointing to 4-digit drops at the open. Is this drop going to continue even further, and how long do we have to fall before we find some sort of safety ground?
Well, I think that we could fall a lot more. Now, whether it happens all in one day, obviously that's not the case, but we have to remember that since 2009, when the market made those lows, that the market has since then, in response to this strategy from central banks and governments to prop up sentiment, has been racing to record highs since 2013 when it first broke out to fresh record highs. It's been an ongoing push to record highs year after year after year, right up into 2020. And so when you take it in the context of what we've seen over the past decade plus, as much as the pullbacks have been intense, And as much as we might get fearful of a 15% decline in equities and traditionally what 20% might mean, we're not in the same type of market environment as we have been traditionally. And the setbacks that we're seeing right now are really could just be, the early phases of what could be additional setbacks in the equity market as this plays out, which really more looks like a potential correction. Now, as far as where we could be headed, I think that going back to, if we talk about the S&P 500, going back towards the 2018 low, that could be a realistic setback. And again, that's the 2018 low when we were making record highs all throughout 2013, 14, 15. So it's not that big of a pullback, but in the scheme of percentages, that would be about around roughly a 30% decline.
All right, so then let's take this full circle back to crypto markets, which themselves, despite the supposed safe haven narrative that has dogged Bitcoin in particular for so long, as equity markets fell, as coronavirus panic has spread, so too have crypto markets, led by Bitcoin, down around 9% on the day as we film this segment here today, with other cryptocurrencies out there, other alts in the market, down in double-digit declines on the day. Is this a sign that the safe haven narrative is gone in the crypto markets and in Bitcoin in particular, or what can we sort of see and extrapolate out of these massive market falls?
So let's talk about Bitcoin. As far as Bitcoin goes, I think that we can talk a lot about Bitcoin, and a lot of the comparisons to gold are very relevant looking out. And a lot of the price action that we've seen, profit taking in Bitcoin and exit from Bitcoin, can be similar to what we've seen as the behavior to gold if we're going to talk about the safe haven side of things. As equity market participants are losing, or as investors are losing in that part of their portfolio, they're going to look to offset those losses with profits and exits from other markets like gold and Bitcoin. So setbacks there can be attributed to that. Now, as far as the safe haven correlation goes, we have to be careful because, again, Bitcoin is not a safe haven asset in the sense that it does have correlations with an emerging technology, and that is very important. And it's important to understand that because when markets start to return to normal and people want to put risk back on, does that mean if it was a safe haven asset that Bitcoin would not be appealing? Of course not. It's very appealing, and it has that part of it that needs to appreciate significantly if it's going to get to where it's going to get to medium term and longer term as a sort of store of value safe haven asset. But there's certainly a lot of upside to Bitcoin as this emerging technology, as this emerging currency and asset class ahead. And so when we look at the price of Bitcoin and we take a look at the price action, we need to take it into the context also the volatility relative to its ranges. And so when I show this chart here, what I'm showing is Bitcoin is looking for a higher low off the 2018 low. That's how we're viewing it. And the 2018 low, of course, came in around $3,000. And so we've seen setbacks, and the higher low could be anywhere as low as back down towards the 5,700 area. That's some internal support from back in 2018. And really everything in between here and resistance right now at 10,500, where we kind of stalled out this year, that coincided with an October 2019 high, is just choppy consolidation. And you need to be able to take a step back and kind of not get caught up in all the massive swings, and then look at the chart just like this and say, okay, we're consolidating. It could be a wide consolidation, but ahead of that next big upside extension, eventually through 10,500, the 2019 high, and then eventually back towards a retest of the record high from late 2017.
All right, so then Bitcoin seems to be able to be finding at least some leverage and some grounding in choppy waters, as you said there. But let's talk about alts for a moment, because we've seen some pretty significant declines in alts that had started 2020 with such power and vigor. Everyone was calling the alt season on. Is it fair to say at this stage, with significant falls coming across most of the major alts and plenty of the minor alts out there as a whole, do we think that the alt season is well and truly done? And will Bitcoin continue to be the one that leads the pack and dictates direction from here on out?
Right. So the important thing to understand here is when we talk about global sentiment and how markets are impacted, it's important to understand the difference between what Bitcoin represents as an asset and what some of these alternative coins represented as an asset. So let's talk about Ethereum and that blockchain and all the currencies that are kind of trading over there. A lot of that, okay, Bitcoin taking on a role, arguably, I believe, as this, potentially down the road looking to be a sort of safe haven store of value asset. That's what Bitcoin's purpose and functionality is. Now, if you look at these other currencies on the Ethereum blockchain, these are more currencies that are associated with these organizations and projects that are coming up, and very much associated with funding these projects that are going to be used for this Web3 adoption, and to drive innovation forward. And clearly, that type of project and that type of market and asset class within cryptocurrency that's working towards the innovation side is going to be much more sensitive and correlated to risk. And so as we see market sentiment, global sentiment start to deteriorate, these blockchains that have these projects are going to be a lot more sensitive to risk off. And so that is why I would suspect that in this market environment, you would see Bitcoin outperform relative to Ether and other altcoins. And so if we're looking at the price of ETH relative to Bitcoin, that I would expect that rate to be headed lower in a risk-off backdrop.
All right, then earlier this year, you and I discussed what you thought the sort of conclusions were where Bitcoin might cap off the year. At that point, back when markets were still considerably stronger and the bull market seemed to be underway, determinedly, you called Bitcoin at around 15 to 20,000 come the end of 2020. Does that prediction still hold, or any time for reassessment at this point?
It very much holds. There's been nothing that compromises the outlook. Again, when we look at the chart and we see the consolidation that we're seeing, it's important to understand what that consolidation means fundamentally. And when I talk about that, the lower end of that consolidation, let's say just below 6,000 in the 5,700 area, that fundamentally represents an area pre the run-up, right? That run-up that we saw in late 2017, where we saw the market run from about 5,000 up towards 20,000 for that network effect run. That 5,000 to 6,000 area, all very strong, committed players that have been in the market that are looking at this asset, I believe, as for that medium and longer term purpose as this store of value, safe haven. And so down towards those levels, you have a very strongly convicted market that's going to be holding on and looking to be taking advantage and increasing exposure around those levels. And so while we hold within this area here, and even if we dip back towards the 5,000 to 6,000 area, I suspect that it's just going to show the strength of this market for those medium to longer term values. And we could then start to see a quick run up through 10,500, through 13,750, where the 2019 high is, and then up into that projected target into the end of the year. And so I don't think that it changes anything. I will add that we have to also understand that really this is the first time now with this global downturn that we're seeing Bitcoin respond to global macroeconomics. You know, the pullback that we saw in 2018 was very specific to what was going on within this emerging asset class. Now, and this is a good thing, we're seeing Bitcoin respond to global macroeconomics, and we're getting a feel for where the value is going to be and how this market is going to respond. Remember, this is a currency that was born out of a rejection for what was happening in 2008. And yet since 2008, we haven't really had that opportunity to see what the exposure and the weaknesses to the global economy because of all the proponomics that we've seen. So it's going to be an interesting time. And it by no means does it compromise the outlook for the possibility that this market could be trading 15 to 20,000 into the end of the year.
All right, well, certainly I think most will agree we're headed for an interesting time, no doubt, what happens to the markets in the days, weeks, months, and even years ahead. All right, Joel Kruger from the LMAX Group, I want to thank you so much for taking the time to speak to us, break down a little bit about what's happening at the market. For everyone viewing, make sure you stay with us at blocktv.com for all the latest in news and information. I'm After Westropp Evans. Thanks for watching.
For more news and updates, follow us on Twitter.